Campbell Soup Company buys Sovos Brands, maker of RAO'S sauce, for $2.7 billion. Is this a good acquisition, and does it create a buying opportunity in Campbell stock? Now let's look at my portfolio performance. This is something I promise to be transparent with every video. I want honesty. If you like that type of content, be sure to subscribe. You'll see right smack dab in the middle, my consumer staples sector is empty. I do not currently hold a stock there. And Campbell stock is a consumer staple stock. So we're gonna look and see if this is one that I would add to my portfolio. Now, before we get into the video, I also want to say I have a $100 cash bonus offer for you guys. Ally Bank is offering a $100 reward to my friends and family on this channel, and I consider you all my investing family. I say that often. If you use the link that I will put down in the description of this video, you can receive $100 for opening an Ally Bank account. Details will be provided when you enroll, but to make sure you get the $100, you cannot currently have an Ally Bank account. You must utilize direct deposit, and you will need to fund the account with any amount. So you get a free $100. I in return will get $50. Now, I do utilize a high yield savings account that earns 4.25%. You think of stocks that have dividends. To get that with a very safe backing of a savings account, I think you can't beat this for your rainy day savings. Now, most banks will pay a very sad 0.1%. With Ally, you can get 4.25% with their high yield account. I've had so many of my friends and family ditch these low interest savings accounts and get the high yield savings account, and they all say, why didn't I do this sooner? So again, this is only for the first 5 people that are new to Ally Bank and are not currently a customer, who open up an account with my personal link in the description down below and fund that account with any amount through direct deposit. Then you get $100. It's that easy. And you can also choose the high yield savings account, which will earn you 4.25% on your money. So be sure to do this quickly if interested, because it's only for the first 5 people to do this. I'm not sponsored by Ally, and since all of my friends and family utilize Ally Bank, I wanted to share this opportunity with you all. Now let's get into the video. Campbell's is a stock I never really looked at until I heard they were buying the company behind an increasingly popular spaghetti sauce brand, RAO'S. I am very into fitness and health and follow a lot of health and fitness related sources, and RAO'S has been mentioned more and more lately with rave reviews. So when I heard of this, I thought we would take a look and see if this company is one I would put on my watch list for a possible investment someday. Now, Campbell's, they're a meal and beverage and snack company. You will see here they have many brands that they've acquired over the years. Of course, they're well known for their own soups, but they also have companies like Goldfish, Cape Cod, Late July, Kettle, V8, Pace, Milano, Snyders. They have SpaghettiOs. So they have some really good brands here and some others that maybe I'm not familiar with. Regardless, it's a pretty impressive slate of brands. RAO'S, their parent company is Sovos. So Campbell's will be acquiring the RAO'S sauce, the Noosa Yogurt, and the Michael Angelo's frozen entrees. If you look at Campbell's stock chart, over the last 5 years, it has not been a good performer. They're only up 4.69%. Where Sovos, they IPO'd in 2021, so it's been almost about 3 years, and they're up 65.84%. So they've definitely done really well. Now let's compare the stock facts of these two companies. You'll see with Sovos, they aren't showing some price per earnings or price per operating cash flow metrics. That's because they fluctuate between net income and net losses. And I think this is pulling from the prior quarter when they had a net loss. Regardless, we'll see with Campbell's that their trailing 12 months price per earnings is 16.86, which is lower than that 5-year average, which means they might be offering a good valuation right now. Their price per operating cash flow metric is 11.37%, but you'll look at their cash flow growth over the last 5 years, it's negative 1.91, where Sovos growth is 20.02, which is very healthy. Now, when it comes to revenue, Campbell's has not been that impressive. Over the trailing 12 months, they've grown 9.8%, which is good for a company like this, but over the last 5 years, it's been not great at 1.65. Now, Sovos has grown to 24.53% over the trailing 12 months. In the last 5 years, it was 17.75. So we are seeing kind of a pickup in revenue growth with the two companies over the trailing 12 months versus the 5 years. And I believe this is why they're interested in Sovos, because the revenue is showing very good growth. Now with gross margins, Campbell's is at a 34.21, Sovos is at 29.89. So definitely we see the gross margin a little bit healthier with Campbell's. They're both decent, but the return on equity I'd like to see better with Campbell's at a 22.46, though that's not bad. Where Sovos, it's not that great, a negative 10.15. With debt-wise, I think they're both a little too high in both areas. The debt to assets are in the low 40%, but that debt to equity shoots above the 100% for both. Sovo does not pay a dividend, where Campbell's does at a 3.37% yield. That payout ratio is at a 57%. I like the companies that I hold to be below 50%, so kind of a negative mark there, as well as their growth is not great. 0% growth over the last year and 1.12 over the last 5 years. So some other financial mentions. Campbell's does have positive free cash flow, but increasing long-term debt quarter over quarter. Where Sovo, its long-term debt has remained flat. It's had a mixture of net losses and net income over the last 4 quarters, but it is maintaining positive free cash flow, which is good. So will this be a good acquisition? They are paying $2.7 billion for this company that has a market cap of 2.3. So they're paying a premium, but for a premium branded company. It's all about premium products with high margins, and I can see a premium brand with Sovo, but not the high margins yet. I think they could possibly get there with the backing of Campbell's. I do see, though, this rising tide out there of consumers leaning more and more towards healthier foods, and they are willing to pay for it as these consumers see health as an investment. I have 2 apps on my phone that I utilize, and what they do is you can scan a product and they let you know the overall health score, and it lists the good and the bad ingredients and tells you why the bad ingredients are bad and the possible negative health effects. I went to Costco last weekend and I went to try a sample, and I scanned the product while I was trying the sample with my app, and the employee at that food stand mentioned that everyone's doing this now. What is that? So I explained to her what it was, and to me, to see that kind of proof out there in the real world, that means that more and more people are buying those healthier products. There's a more push towards healthier food options, and it's working. A lot of big food and beverage companies are acquiring healthy food brands, and I think they're all onto something here. Now, when a big company acquires a smaller company, there's always a lot of worry with the smaller company of the products that people like that they'll be changed. But Campbell's CEO vows he won't change RAO'S recipe after the acquisition is done, so that's a good thing. Again, I believe people will start shelling out more and more money over time for healthier options as more education and awareness is at our fingertips through methods like the apps I use, or maybe more health channels on YouTube, which I also see and follow many. They all suggest healthy food options. They sell recipe books or books in general on what to buy, and it gears people towards buying those options. So these companies see where the money will be going and they are following it, and that's very smart. Time will only tell if this will be a good acquisition for Campbell's. RAO'S is a popular product, and I think they can leverage that and grow that product. The Noosa Yogurt and Michael Angelo's frozen foods I don't really hear about, so I cannot say if those are going to be good products that will grow. Maybe you guys have some insights you can let me know about. But overall, Campbell's is expanding its brand offerings, but I think other companies like Pepsi and Coca-Cola offer better and more diverse offerings. So I think Campbell's has a medium-sized moat and so-so financials, which knocks it down for me a few points. It does have brand awareness, and as far as products go, I think it has some strong offerings that customers will repeatedly buy, but they also have many that will only be bought once in a while. So due to this, as well as I don't think there will be a huge revenue boost due to this acquisition for Campbell's, I don't plan on buying Campbell's nor adding it to my watch list when there are better food and beverage companies with those products that I think people do buy more regularly throughout the week by week and use them pretty much every day, that these companies have the wide moats and more impressive financials than Campbell's. So let me know what you think of this acquisition and if you plan on buying Campbell's and why. Don't forget to take advantage of that free $100 offer from my link below with Ally Bank. Only the first 5 will get it. With that said, thank you for tuning in and see you soon on Mark Arnold's Finance.